Welcome back. This is Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we're going to be getting to pre-open in just a bit. So let's get in our derivative strategist who's joining in, Manoj Muralidharan. Hi, Manoj. Morning. Thanks so much for joining in. Manoj, what's the strategies you have for us today? We're getting into expiry week, so things will get rather volatile. How do you approach it?
Good morning, Nigel. Nigel, I'd like to throw some light on certain derivative aspect that a lot of traders don't really realize, and we need to look into this aspect because FIs follow this as a trend. Now, if you see, almost 77% is what the FIs are short, and obviously it was because of the union budget. There is a hedge position that the FIs usually carry. So, if you just look into the alpha, what happened on 1st of Feb or the levels at which we are, the Nifty is almost at the upper side of the range, almost at 17,950, and the Bank Nifty is still more or less at that range when the event happened. Now, Friday's session, we saw some profit booking which came in, and 17,900, which happens to be the base of the put, I think, still was respected, and we saw the Nifty close above that. Now, when the monthly rollover happens, the cost of carry, which I was discussing since last week, that is a parameter that comes into context, and we believe that there is high chances that the Nifty might respect the 17,850, and we would be inching more towards the 18,100 to 150. So the view here is for the Nifty, we are positively biased. I believe till the time 17,850 is not breached, we need to maintain a positive bias. Buy a 17,950 call option close to 70 rupees. That can give you a target of around 150 to 180 on that. However, having said this, the Bank Nifty has seen some short positions, so only turning bearish below 40,900 close in the banking or the Bank Nifty would be a prudent strategy. Stock specific wise, we believe there are good stocks, even good on weightages like Reliance at 2410 to 2420 becomes a good buy, 2400 as a stop loss, and has a potential to go to 2460 to 68 as a target. This is in the next 3 to 4 days as of this expiry we're talking about. Tata Steel also happens to be a good buy. We believe that 116 to 114 can be a target. The stopper should be 109, and you can initiate Feb futures closer to 111, 112.
Okay. By the way, some news on Kalpataru Power. There's a big order win over there, over 3,100 crores. So just watch for that. And you have the pre-opening rates which are settling in. The market looks like it's going to open in the green, up almost 0.2%. Not bad, 30 points higher on the Nifty. What's leading from the front is Bharti Airtel, now up about 1%. You have Infosys, Nestle, Asian Paints and Reliance that are in the green. And once again, Adani Group stocks are taking it on the chin this morning. Adani Enterprise, Adani Ports are all down about 3 to 10 odd %. Cipla is the other one that's down almost about 3.5 odd %. Anand Tandon is still with us. Anand, this month and of course last year, the star of the show has been ITC. This month, yet again, it's almost a 10% rise. At this price, around 380 to 400, do you see more upsides in ITC? And, if suppose an investor has missed out on the move that we've seen in the last 1 year, does it make sense to still go in?
So I think the short answer is yes. There is still a lot of value if the companies were to demerge at least part of their businesses, which still remains a hope. Obviously, the returns from here will be lower because it has already moved up. But that said, there is no great danger to any of the earnings growth. One is still hoping to see much better margins coming in from the FMCG side of the business. Hotels would have recovered fairly significantly, and the core business of cigarettes has never been under any serious threat. So I think overall, I would imagine that ITC will continue to remain an outperformer in the FMCG basket.
Okay, all right. Anand, we just had some news coming in on Hindustan Zinc as well as Vedanta. Now, Vedanta promoter clearly needs some money to come their way by the dividend route. They had proposed this transaction where, in fact, Hindustan Zinc will go ahead and purchase the international zinc business. That would give Vedanta Limited money, and in turn, they would declare a big dividend. How do you approach both these two stocks now? Because Hindustan Zinc is likely to continue paying big dividend if this transaction doesn't go through. Your take?
Obviously, with more cash flows, Hindustan Zinc has been a cash cow for a very long time, keeps generating a lot of money and has been throwing up cash. From a Vedanta perspective, I guess this transaction does make sense. But I think what the government is doing is probably right. As a major shareholder there, I don't think that they will get the same kind of value given the pricing at which they are supposed to be acquiring the company. So if the transaction were not to go through, I think Hindustan Zinc is okay. If it were to go through for whatever reason, I think you may see a bit of a downside in terms of the share price of that. Vedanta per se, I don't particularly, again, my preference is not for taking pure commodity players as an investment, and Vedanta falls squarely in that zone.
Sure. Okay, Anand, have a great week. Thanks a lot for joining us and commenting on individual stocks as well as sectors. We appreciate your thoughts. The market pre-opening rate is settling largely flat. So let's talk about some spaces now, some sectors that is. Cement is on our radar. There is a couple of dealer checks indicate that prices have been hiked, or at least attempts are being made for price hikes in the first half of February. About 3 to 5 rupees a bag in North and Central India, while 5 to 10 rupees a bag in West and East. So Naveen Sahadev, the Director Institutional Equities at Nuvama Wealth, who tracks this place closely, is joining us now. Naveen, thanks a lot for joining in. Can you tell us exactly what the price increase has been across the board? Where was it the highest? And is demand strong enough now for these prices to get absorbed?
Right. So demand has been strong all along. I think last few months, ever since December, the environment, certainly from the demand side, was extremely conducive to take price hikes. And yes, last week, I think around Thursday or Friday, we did hear about attempts being made anywhere between 5 to 15 rupees. But I would still look at it, it's a little late in the game, because come March, you again have volume pressure or year-end volume targets to be met. And that historically has not really helped prices to sustain. In fact, prices tend to buckle under pressure of volumes. And this time, frankly speaking, I think the hike was more in anticipation of a GST rate cut than anything else. Since there is no GST rate cut, I would like to believe that there would be some rollbacks in the coming days.
Oh, all right, Naveen. Good morning, Naveen. So we got that point, and I believe you're fairly cautious on the sector as well. Give us a couple of numbers, Naveen. How much was the EBITDA per ton improvement from your coverage space or for the industry on the whole in Q3 in comparison to Q2? And given the current dynamics, operating leverage will play out. But as you said, pricing has not really come back. What's the improvement you're working with for Q4?
So Q3, I think, saw about 150 rupees of EBITDA per ton improvement on a sequential basis on an average. And I think Q4 can see a similar kind of a number, but that's not the point. What you should look at is FY24 numbers, which I think at the consensus level are expecting at least a 30% kind of a growth in the absolute EBITDA for, let's say, like an Ultratech, which basically means EBITDA per ton is expected or on the street to go up by 20%. To me, given in the current scenario wherein the pricing power is weak, that is at a risk. FY23 is largely done and dusted. So it's the FY24 where I think there can be certainly an earnings risk to the EBITDA per ton.
Okay, so there's an earnings risk to the EBITDA per ton. Which are the companies that relatively look better placed from the entire basket that you track? What are the stocks that you still have a buy on?
So we have a buy on in the mid-cap space. We're looking at JK Cement because that's one stock where you see consistent capacity additions and visibility of consistent volume growth. And of course, the ROEs have always been superior to the industry. So these are the two basic parameters, consistency and high ROEs. And in the large cap space, I think definitely there is value in these frontline stocks like ACC and Ambuja. The other stocks we are, as a sector per se, we are neutral, but see value definitely in ACC and Ambuja at these prices.
Okay, all right. What about Big Boy Shree Cement? Naveen, I recall they used to get very elevated valuations and multiples. They've not been finding favor. The stock as well is way off its 52-week high. But how would you approach that one? You're still negative on it?
Yeah, in the sense, see, it's a great company, no doubt about it. But just that they have maxed out on most of the efficiency parameters in my view. And hence, in that context, to expect a further significant improvement is a little difficult. So it's more benchmark to the industry that since the industry, I have a cautious view. I have definitely a cautious view on Shree Cement as well.
Okay, all right. We will leave it at that. Thanks a lot for joining in. That's on the cement space, but overall on the market, looks like the start is going to be in the green. So the Nifty is up about 21 odd points. Nothing too much on the upside, but it'll be led by names like Power Grid, Bharti Airtel, Sun Pharma, Axis Bank, Kotak Mahindra Bank and Eicher Motors. So these are a couple of stocks that are seeing big gains. And on the downside, once again, Adani Group stocks are taking a bit of a knock. And Cipla, as we were telling you earlier, is down almost about 3% odd. So Darshan, what would the big call be at 9:10 this morning?
Well, Berger Paints. Berger Paints is a buy with a stop under 558.
And Mitesh, how about you?
Yeah, I'll go with the buy on L&T with a stop below 21.95, targets of 2,300 here.
All right. Thanks a lot for that. So that is L&T and Berger Paints that the technical experts like. But Surbi is back with us to tell us about UBL and why she's watching that one this morning. Surbi, over to you.
Two sets of news for United Breweries, one negative and one mildly positive. The negative is that the company's MD and CEO Rishi Pardal has announced his resignation on Feb 16th and his 6-month notice period has begun. The other news flow is the Supreme Court has stayed the proceedings to recover the 750 crore penalty that was imposed by the Competition Commission of India. Now, just to alert, in 2021, CCI had imposed a penalty of 750 crores on the company on the charges of cartelization, and in December 2022, NCLAT had upheld that order. Now, Supreme Court has agreed to hear the company's plea against the CCI penalty. For now, this penalty has been postponed, but the decision can go either way.
All right, Surabhi, thank you very much for that. Let's just have the UBL chart up if we can. Say the last 2 years or so, if we can pull a quick chart up. We had highlighted, I think, on the 14th or 15th of December last year, the formation of what essentially at that point looked like a double top for United Breweries. The price was, 1791, 1800 or so was the price. This is on the 14th of December, actually, last year on Market Laser. And, from that level, 1800 stocks now down to about 1475 or so. It's, actually pretty sharp underperformance, from that point on. This year, the stock's down about 13-14% or so. Just wanted to highlight that. But let's move on. Pharma is in focus. Cipla is something we'd like to revisit. Ekta is here with that. Ekta, morning.
Well, yes, I'm watching Cipla at this point in time because the US FDA, the US drug regulator, has issued 8 observations in a Form 483 for their Pithampur or Indore facility. Now, basically, this particular inspection, which took place from the 6th of Feb to the 17th of Feb, is important because this particular plant does manufacture oral products as well as respiratory products. Now, in terms of the impact, currently we don't know what the nature of the observations are because the Form 483 comes with a lag. So that is yet to be disclosed, but the street is worried because of the number of the observations, which are 8 in total. And the fact that an inhaler, which is an important product for Cipla, which is Advair generic, is expected to be filed from the Indore facility. If in case these are adverse observations, then it could possibly delay the launch of Advair generic in the US market. Now, overall, the Indore plant also contributes quite significantly, around 15% of FY23 estimated EBITDA. Brokerages are a bit cautious at this point in time. Incred says both the products, a Brixon generic, which has also been delayed into FY25 and is a cancer drug, as well as Advair generic, is likely to see a more competitive landscape in FY25 versus FY24. Macquarie has maintained their outperform rating with a target price of $12.35. JP Morgan, which is overweight on the stock, has said they currently forecast that Advair generic launch is in Q1 of FY24 and it is a 5 to 6% contribution to EPS in FY24 and 25. So the key point is what the nature of the observations could be and whether or not it would delay a couple of key launches in the US.
Okay, not looking good at all. Cipla is down on the back of those observations from the US FDA. Thanks, Ekta, for that. Vivek is joining in. There's some FTSE rebalancing which has taken place. Vivek, which are the stocks in focus?
Well, absolutely. So post-Friday market close, you saw the results of the FTSE semi-annual index review. The key stock to watch out for was Kotak Mahindra Bank. Analysts were anticipating whether this particular inclusion of the bank would be in one quarter itself or would it be spread over multiple quarters. It does appear as though the inflows in Kotak Mahindra Bank will come in multiple tranches spread out over 8 to 11 quarters. Anticipated inflow in Kotak Mahindra Bank and the adjustments will take place on March 17th. Anticipated inflows between $75 to $80 million. The other stocks, which are likely to see higher impact: Supreme Industries, APL Apollo Tubes, Patanjali Foods, Solar Industries and Vedant Fashion, and 2 stocks, Gillette as well as Eris Life Sciences, will be excluded from the FTSE indices.
That's very helpful. Thanks a lot for that. Well, let's count down to the opening for the market, the start of a new week. 18,000 has been a bit of a hurdle. Looks like that could be the case this morning as well. The Nifty is up, but not too much, about 20 points higher on the pre-opening. And a couple of these stocks, Cipla is under pressure post the US FDA, observations, 8 observations in the Form 483. Adani Group stocks are under pressure. UPL, SBI Life and Apollo Hospitals are a couple of other stocks in the red as well. It's F&O expiry week too, so let's see how it shapes up. For now, looks like the start is going to be mildly in the green. No great progress as far as the headline index is concerned. Well, that's the first tick on the index. As expected, 15 points in the green for the Nifty. So it's a mildly positive start, you'd have to say. The Sensex is up about 90-odd points. The Bank Nifty is up about 70-odd points. So in that context, very, very flat start to the market. Eicher Motors is your top Nifty gainer. It has been gaining quite a bit of ground lately. Power Grid, Dr. Reddy's, Asian Paints, Bharti Airtel are a couple of other stocks that are holding in the green. In fact, a couple of these monthly gainers, whether it's ITC, Bajaj Finance, ONGC, all been big gainers this month, about 8 to 10% higher. They're seeing some follow-on buying this morning. Titan, Britannia as well are trending in the green. They've been big movers this month. A couple of these IT names, HCL Tech, Infosys, are also holding up, providing some support for the market. But what is not supporting the market this morning is Cipla, 5% lower now. The street definitely doesn't like the US FDA observations, more competitive intensity in its products, and Cipla is the biggest loser right now. Divi's Laboratory has also lost almost 20% this year. I mean, in the first 2 months of 2023, Divi's is down 20%, and it's exerting some more pressure on the index, down about 0.5% right now. Apollo Hospitals is down about 0.6%. So pharma in general is not doing well this morning. Sun Pharma is also down about 0.5% or so. Apart from that, you have consumer or consumption stocks which are also on the back foot this morning. Nestle, Tata Consumer, a couple of others like Britannia, just about, trending on the red line. So largely you'd have to say it is a start where the market is just about consolidating. No direction. So it's pretty much directionless in the early moments of trade. In the broader market, Samvardhan Motherson is the big mover, up about 5% and plenty of other stocks that Nigel will talk about. But in general, very, very quiet start to trade.
Well, it's a quiet start, Sonia, but quite a few stocks, in fact, are reacting to positive news flow. As you mentioned, in Samvardhana Motherson, well, that's up close to around 4%, one of the top traded stocks in the first minute or so. You have KEC International, they won a large order of around 3,000 crores odd, so that's opened up well in the green. RITES, they won an order of around 76 crores odd, so that stock as well has some green out there. Pennar Industry is a large order for the size of the company. 850 crores is the order bin out there. And Kalpataru Power as well, as we saw earlier today, well, we had some news that was flashing on the screen that they as well had won a large order. So Kalpataru Power as well. A lot of order wins, all those stocks reacting positively. United Beauty as well, the managing director and CEO, Rishi Pardal, had resigned, though they've got to stay on the CCI penalty. For the time being, the stock is mildly in the red. Precall as well as Minda Corp. In Friday's trading session, both of them ended with a sharp cut. Today, both of them have opened up mildly in the green, with a gain of close to 100%, both Precall as well as Minda Industries. A couple of other notable movers in top volume traded stocks. Nykaa is up close to around 3%, so that seems to be bouncing back. And Adani Wilmar as well, large volumes being seen out there. That one as well is higher in today's trading session. The Nifty has given up all those gains. As we said, the sell and rise is likely to play out. So that's played out, but a crucial support is at around 17,850. I think if we hold on to that, then we're in a bit of a range. But we've come off 50 points in the first 2 minutes itself.
I mean, Nigel, as I said, it's clueless, right, as we start a new week. Not clueless, but clueless, because earnings are behind us. US markets are shut. And that is later today, and there is not very much new from, over the weekend to inspire action. Price action either up or down.
Could be clueless as well, right?
Really,
I think the market has been clueless for a while.
The thing is, markets are about collective wisdom, right? So eventually they will find and set a direction. But I mean, for now, maybe yes. Just a few other things before we move on. The broader markets are trying to sort of, buckle up some energy. So the market breadth went to being absolutely 1:1, but now I think more advances as compared to declines. 1,050 higher, 730 lower. That's basically where we're at. Apart from what's already mentioned, maybe a few other names. So Adani Power and Adani Wilmar are coming up with gains 5% and on power and 3% on Adani Wilmar. Nykaa is up about 3.25%. KEC we mentioned. Mirza International has been up and up last few sessions. Big moves, 10, 15% moves. Today it starts about 2% higher again, 278 on Mirza International. IDBI starts about 3% in the green. a company called Zentech, which is up 3.5%. I think it had a good week last week as well. Delivery is up about 2.33%. Kalpataru Power is up about 2%. Star Health is about 3% higher, and so it goes. Barbecue Nation is up about 1.25% as well. So overall the broader markets are not doing too badly. Slowly but surely the gap is widening in favor of advances, and now it stands about 2:1. Although it's still early days. Cipla, of course, as we highlighted, is the big cut, down almost 6%. And you've got the other Adani names, Adani Enterprises, Ports, Transmission, Adani Green, which are down in varying degrees. HAL saw a big move, I think, on Friday. It's down about 0.6%. And you got Shilpa Medicare, which is down about 2.75% as well. Shilpa Medicare, again, big mover on Friday with volumes as well. So that's the market opening. We're up 30 points now. Down 30, up 30, but it's relatively quiet, at least on large cap and the index itself, 17,974. Our market master of the day is with us. Sanjeev Prasad is Managing Director and Co-Head of Kotak Institutional Equities. Sanjeev, great to have you with us here on the program. Thank you very much for your time. I just want to start with earnings. I put out a piece last Friday looking at how FY24 earnings have been downgraded for the Nifty companies and the top 200 companies. And roundabout, in both cases, about 60% of the companies in both these groupings have seen downgrades. And some have been very, very sharp downgrades to that. You of course, look at earnings very intensively, you and your team. But I want to ask you, is this a temporary phenomenon, as many point out? Because Diwali was earlier, as compared to other years. So Q3 was different in that sense, maybe a little bit of inflation hurting, or is there a slightly bigger, more entrenched problem on the demand side? Your assessment?
I think, over the last 3 months, what we are seeing is a fairly big slowdown as far as discretionary spending is concerned. And probably there are 4 factors affecting the demand. Number one is simply, the ending of the revenge spending, which happened after the economy opened, let's say, early part of last year. Number 2 is obviously lower confidence in the IT households now, given the fact that we have gone from a situation of, massive hiring to suddenly, a big slowdown in hiring. Number 3 is simply an affordability problem. Prices have gone up a lot in India in the last 3-4 years. And lastly, also have higher interest rates, which results in mortgage payments going up. So all these 4 factors put together is probably hurting, the ability of households to spend on discretionary items. Basic items anyway have been struggling for the last 3 years because lower income households got very badly affected by COVID in 2020 and 21 calendar years, and also high general inflation in 2022. So anyway, we have still not seen a full recovery of the income of lower income households from this, twin negatives, I would say. So all said and done, I'm not that surprised that you are seeing, some amount of earnings cut. I suppose these are more in the discretionary space. Having said that, these are reasonably well flagged. If you look at our own numbers, we haven't really changed anything in the last 6 months now. There have been some minor downgrades for some of the discretionary names, but otherwise, earning numbers have been pretty much broadly the same in our case, at least for 23 and 24 for the last few months now.
Okay, that has been a common narrative, as you said, right? The slowdown that we've seen in consumption, especially discretionary consumption in the lower strata of the market, so rural, semi-urban, etc. But urban is a completely different picture. So in this K-shaped recovery, you're seeing a massive up move, especially in the premium end, whether it's real estate, auto. Is that a space that you think could gain more currency, especially in the listed entities?
Yeah, I won't agree entirely to the fact that only the lower income households are not doing that great. I think the problem now is pretty much quite broad-based. I would think. Even some of the people who were in a reasonably good position to spend, even probably they are starting to hold back a little bit. Because as I was saying earlier, the entire IT ecosystem is not looking that great. I mean, 6 months back, every IT techie had 3 offers and expectation 30% salary increase. That's clearly not happening. So there is clearly a slowdown as far as that entire ecosystem is concerned. And you have also seen a fair amount of job losses in the non-traditional IT services companies, right? So I would assume now the effect is slightly more broad-based than just looking at let's say the lower income households in urban and rural areas. Yeah, so let's see how things progress. Now coming to the real estate part, demand so far has been holding up reasonably well. But I suspect this is more to do with longer term factors, nothing in terms of a sudden increase in affordability of households. If you look at the last 5-7 years, real estate prices haven't gone anywhere, which means over the last 5-7 years, affordability has gone up significantly. Real estate prices effectively are down in real terms. So I assume that itself is a big driver of volumes now. Plus the fact that over the last 6 months in particular, you have started to see finally real estate prices in some of the major markets starting to move up. So that may also be acting as a catalyst now for houses to start looking at real estate more favorably. So I suspect that is probably what is more driving, real estate demand. And affordability had increased significantly last 5-7 years, and plus now there is some trigger of buying real estate because prices are starting to move up.
So again, slightly outlook. You said you've not changed your estimates, but I think you were more realistic to begin with in terms of estimates, as the team at Kotak always is. I just wanted to get a quick sense in terms of when do you think this will resolve itself? Will this patch of softness run for a while, and things will catch up on their own, a quarter, 2 quarters? What's your sense?
My sense is on the consumption of basic items that should start recovering going forward, because the factors which affected consumption of basic staple items, thankfully they have started reverse. So if you look at both urban and rural areas, job recovery is pretty much ongoing as of now. Income levels have started to go back to pre-COVID levels. So hopefully, basic staples consumption, which unfortunately a lot of households had to cut during those bleak years, they will probably start to reinstate consumption of some of the basic items. So I suspect next 2 quarters, hopefully you see some acceleration in volumes of staples. Coming to discretionary, I suspect this may be a slightly longer term phenomenon. I mean, when I say longer term, more like 3 to 4 quarters. And a lot of it will depend on how inflation behaves, because if prices keep on going upward, unfortunately that does affect affordability of households and the ability to spend on some of the discretionary items. If you look at the prices of some of the items, the amount they have gone up in the last 4 years is pretty worrisome, I would think. I was just looking at something like Dove soap, that is up 13% CAGR actually last 4 years. You look at something like Macaloo, burger of McDonald's. I mean, that's gone from 39 rupees to 52 rupees in 4 years. So clearly prices have gone up a lot, which is effectively affecting affordability of even the higher households, higher income households. People who thought they were in a position to buy, let's say, a 2-wheeler or 4-wheeler last year, suddenly they realized that, prices are up like 10%, we cannot afford it anymore. Hopefully, assuming prices don't go up now, inflation is starting to come under some control, and as income levels keep on rising, hopefully this affordability factor starts becoming better over the next year or so.
Oh, I take your point entirely. I mean, pockets are being pinched, right, because of inflation. Whether you talk about the lower strata or even the higher end, definitely inflation is hitting consumption. But I wanted your thoughts on the technology space, because this year some of them have come back in a big way, whether it's HCL Tech, TCS, Tech Mahindra, all up about 8 to 10%. Do you think the worst of the fall that we saw last year is behind us, and has the time come to at least nibble into this pocket now, the large cap tech companies?
It's too early, to be honest with you. Somewhere I think Indian tech companies are performing in line with what was happening in the US. So somewhere the US in the last 1 month or so, some narrative had got built that, since inflation is coming down, the extent of rate increases will not be very high by the US Fed. If you look at the US Fed futures rate, until recently the expectation of the market was it would peak at about 5%. Now in the last 2-3 weeks, it's gone up to actually about 5.5%. So if you look at the most recent data points in the US, inflation still continues to be very, very high. Retail sentiment is still very good. Labor market is still very, very strong. So these may look like, good points as far as the economy is concerned. But my worry is, the US Fed has no option but to keep on tightening, raising rates, and market has finally started to, I guess, realize that, the inflation problem is still not coming under control. So somewhere the market is readjusting to this higher for longer interest rate phenomenon now. And I would assume the US economy has to slow down significantly for inflation to come down. I don't think the earlier belief that you could have, a nice situation of inflation also coming down and the economy continue doing well. I am not very clear how that will exactly play out. So I think the stock prices are definitely not factoring in any sort of a major slowdown in the US or, God forbid, even the possibility of a recession. If you look at the multiples of most of the IT names, they are significantly higher than pre-COVID levels. You could argue maybe pre-COVID levels valuations were on the lower side, but across the board, IT names have seen a big rating compared to pre-COVID levels. And if our thesis is correct that the US has to have a bigger slowdown if inflation has to come under control, then I think you could possibly see a period of derating for the IT names too.
Okay, Sanjeev, just to stick with that consumer theme that you were talking about, are there any pockets there where there has been, like for example, consumer durables, right? We've seen big price damage across the board in that space. One should, where the opportunity size is still very large over a number of years, which one should get exposure to now, when things are down and out. Any other, your view on durables per se and other areas in that consumer space?
See, the way to look at it is what's happening in the short term and then in the medium to long term. So if I look at the short term, as I was saying earlier, we do expect some acceleration in volumes of basic or staple items going forward. If you look at the multiples, some of the staple names, they have not really related compared to the pre-COVID time frame. So assuming you continue to see, income growth, job recovery, all the good things in the next 2-3 quarters, I would assume, volume numbers should start coming back for the staple names, which means even though valuation on an absolute basis may be high, the fact that they are not related significantly over the pre-COVID to now, in fact, some of them are actually down on a 12-month forward basis. Presumably the multiples remain intact. You make some money on simply, earnings growth. So that's one area which you could look at. The staple space looks interesting as of now, I would say. The discretionary names, I would still be a bit cautious in the short term because I don't know how long the slowdown is going to be. But if you are positioned for the medium to long term, let's say anywhere from 2 to 5, 10 years, investment horizon, I think some of the, consumer durables, as you rightly said, could be interesting because we have seen a big correction in the prices. Valuations are not that bad in the, assuming, let's say, medium-term growth prospects of these companies. So you could look at some of the names like a Crompton, etc. Valuation is not that bad. It's about 35 times on a 12-month forward basis now. There could be possibly some more earning downward, but I think the worst of the bad news is probably seems to be priced in over there.
Okay, let's wrap this up with your conference that is currently underway, the Chasing Growth Conference. What is the investor mood like? What are the themes that you're looking at?
Well, as of now, people, are coming back to India after 2 to 3 years. So the themes haven't really changed much. Ultimately, people want to own, consumption, investment and outsourcing sectors in India. Investors generally have a fairly positive view on India, I would say, on a medium-term basis. So nothing really has changed in that construct. The only thing which people are doing now is probably taking a call between China and India on a more short-term basis. So for the last 3 months, as you would have noticed, China has done phenomenally well compared to India. And a lot of investors probably have taken that call, that maybe in the short term, China is a better market, given the valuation differential between India and China had become extremely large about 3 months back, somewhere about 100% premium for India compared to China. That premium has come down to more like 80% now. I don't know what is the right equilibrium level between China and India's valuations, but over the next few months, assuming Indian market hopefully let's say remains where it is, valuations start looking more reasonable. I would be surprised to start seeing some interest coming back to India because people do like the long-term prospects of India. It's one of the few large growth markets which still left, which can give fairly handsome returns over a long period of time. It's just in the short term, I guess people are simply looking at China more favorably. Plus, the absolute valuation in India is still on the higher side for all the stocks that we would like to own in India. Okay. Yeah, so that's where we are.
All right, we'll leave it at that. Thanks a lot for joining in and taking us through your view on the market. But yes, thank you. Let's move on. The market is very quiet, really. Not too much happening. The Nifty is down just about 25 odd points. Shriram Finance is the company on our radar. Their business momentum has been picking up. Let's find out more about what the rising interest rates could do to their business. Umesh Revankar, the Executive Vice Chairman of Shriram Finance, joins in. The data was quite good in the quarter gone by. Disbursals have gone up by almost 13.5% quarter on quarter. The AUM growth is about 13% year on year and 5% quarter on quarter. Mr. Revankar, good morning. Always great speaking with you. How is the mood on the ground now, and what kind of growth rates do you see in terms of disbursals and AUM for the full year of FY24?
Yeah, the market, the credit demand seems to be quite good because it is very consistent across urban and rural area. We have not seen any kind of weakness or slowdown in any of the market. The demand for the small credit is quite strong across the commercial vehicle and SME business. So I think 24 is going to be equally good because since there is no adversary impact, so I feel as long as the real estate market also keeps doing well, I think the demand in urban area will continue to maintain at this level. Rural seems to be very strong. I'm really confident that rural will remain very strong in as far as credit demand is concerned for the next full year.
Can you give us the growth rates? What would the year-end target be in terms of both disbursals and AUM?
We normally look at overall AUM growth, and 15% is the guidance we have given in the last year for 3 years, and we are very confident of maintaining that target.
Okay, all right. Good morning, Mr. Revankar. Good to hear that both urban as well as rural India is firing, as per your background check. So that's pretty good. But let's focus on the cost of funds. It's been moving up for the industry on the whole because of, rate increase that have come from the RBI. But what was encouraging in the past quarter for you all, your cost of funds, I think, went up by only 7 basis points. And you have been guiding that in quarter 4 it will not go up by that much. So could you confirm that the cost of funds, what is it coming at, the incremental cost of funds, and what that means in terms of a NIMS guidance? Go ahead, sir.
Yeah, the overall cost of funds, because we have very diversified liability portfolio, we are able to maintain or have a good control on the cost of funds. And I don't think it will go beyond 5 to 10 basis points for this quarter. And the net interest margins last year, quarter, the results were 8.52. We should be around that, maybe 5 to 10 basis point correction could be there in net interest margin because of the increase in, but we have the ability, we are in the niche segment, we have the ability to pass it on to the customer, but we don't intend to do it immediately. However, I feel looking at the credit demand and the overall market response, we should be able to pass it on if at all it goes further up. So as of now, we are very confident that net interest margins will be around the level of the third quarter numbers.
Okay. Can you give us some more clarity around the accounting impact of the merger? I do understand that post the merger, the book value has gone up by about 2,800 crores. But I want to know whether there could be any impairment for the next 2 to 3 years because of this.
No, it is only the merger and the fair value comparison of both the accounts, both the companies. That's the impact of that, and there may not be further impact going forward in the next couple of years or coming years. So the merger is totally complete and everything is done and dusted. So there may not be any major impact or even a temporary impact is what we feel.
Motilal Oswal, which tracks your company, their analyst says that in FY24, there could be a margin compression of about 15 basis points over 23. Would that sound reasonable?
As we grow into newer segment, or maybe as we go into larger ticket size, there could be a small margin compression that should not bother us. because ultimately what is important is how we manage our overall portfolio quality and the credit cost. That determines the bottom line. So I think 10-15 basis point correction should not have any impact.
Okay. They also point out, and I don't know if you'd like to respond to that. I'm sure you're in touch with your shareholders, institutional shareholders, etc. They point to the fact that there are concerns in the market, not concerns, but I mean anticipation that maybe there will be sort of a potential exit by investors like Apex, TPG, etc. It's a more stock market related question. Of course, you run the business, but if you've spoken with shareholders, what their thinking is in this, Mr. Revankar, could you tell our viewers? What are you picking up?
See, we all the time we have been in the market. We are talking to the current shareholders and also the potential new investors, and there is considerable interest in our stock. And with now multi-product company and with a strong growth plan, there are a lot of large investors equally interested in participating. So I don't really see that as any kind of a significant event.
All right, Mr. Revankar, the street believes that could be a bit of a supply overhang, but you're saying there's enough appetite for your stock. We take that on board. Let's talk about the MSME segment. That's around 10% of your AUM, right? And most brokerages, they believe that you're planning to leverage the Shriram's branches to roll out SME businesses to new states. So how large can this segment become? Currently, it's 10% of AUM. Where do you see that number headed, and what's the game plan out here?
The MSME is a very, very broad definition. The large number of manufacturing services and trading activity within this. What we are planning to do is we are wanting to get into a smaller ticket that is anywhere between 10 to 15 lakh per ticket size. And they want to get into the SME lending in the northern and central states where we had not rolled out it in the past. The Shriram City Union, which was in the earlier avatar, used to lend SME mostly in the southern belt and in the western belt. So we want to now roll out. We are identifying the industries, we are understanding the business, which we feel very comfortable in lending. And because first of all, we need to understand the business, experience it, then only scale it up. So everywhere we would like to experience and look into the ability of the local team to handle the business, understand the business, then we'll roll out in a big way. So scope is very, very huge. We feel that as far as SME business is concerned, the total potential market size or demand credit gap is around 10 lakh crores. So that is the kind of potential is there. So we should be make a small mark in certain pockets.
Okay. And in the two-wheeler lending, right? I mean, that space has picked up in a big way. It's interesting because this is the same space that was under a big slowdown in the last many years. But for your own business, two-wheeler lending has gone up about 14% year on year, almost 18% quarter on quarter. Do you think this is a trend that is sustainable?
The third quarter, you always have a big growth because of the festive demand. So that may not remain throughout the year. But yes, the two-wheeler industry is really, sales are going up. And we are also having a bigger network now. With a bigger network, better reach, we should be able to really make it grow fast. And I strongly believe the two-wheeler demand, which is mostly coming from the northern belt, because if you see that the agrarian economy has a bigger demand for the two-wheeler than the southern market, where some kind of a maturity is reached as far as the two-wheeler is concerned. So there will be a much bigger demand, and the bigger network what we have now in the northern and central and eastern is going to help us to grow much faster.
Mr. Revankar, final question then, if you could give us a couple of numbers. What's the credit cost guidance? I think it was around 2% for the past quarter. You could tell us what's the outlook on that front, point number one. Point number two is, a couple of brokerages are working with ROEs in the mid-teens. Gettable?
Yes. See, as far as the credit cost is concerned, we are at around 1.94 for the 9 months. We should be able to maintain that 2% level throughout is what we believe. And plus and minus 10 to 15 basis point could be the for next couple of quarters. I don't see any other further increase there. And as far as the ROE is concerned, we are already at 17. We should be anywhere between 16 to 18 at all the points, because now since we have addressed the integration and the operating cost issues, all these things being addressed, I don't really see any surprises there. And if you are able to grow faster, then the ROE can even cross 18%.
Okay, all right. You're sounding quite upbeat, Mr. Revankar. Good to have you midway through the quarter and giving us a quick update out there. Wishing you the best for quarter four, and we look forward to chatting up with you rather soon. Well, let's move on then. The government has reiterated its dissent in the Hindustan Zinc's proposed acquisition of Vedanta's global zinc assets. The government will be exploring legal options in this particular matter. To understand what's the way ahead and what does the company have to say, well, we are joined by Mr. Arun Mishra, the CEO and the whole-time director of the company. Hi, Mr. Mishra. Good morning. Thanks so much for joining in. Well, tell us, how do things shape up? The government is not on board as of now. Is this transaction off the table right now? And if you could tell us, will you look to push through this proposal, maybe with majority of the board members? How does it shape up? Go ahead.
I will again reiterate my position. As far as Hindustan Zinc is concerned, we always believe in and operate in perfect manners of corporate governance. So no deviation on that count. Second, any board decision on such related party transaction has to have approval of majority of minority shareholders. So that's something sacrosanct for all of us. And we have to get that in case that transaction has to happen. Third, as I have always been insisting as a CEO of Hindustan Zinc needs to grow beyond the shores of India to serve rest of the world, needs to acquire assets on other parts of the globe, whether the current asset in consideration or any future asset that may come on its way. So these 3 points are there for all of us. Rest is all a procedure. So let's wait for that. We still have time. I know the shareholders have their own view. We are determined
Mr. Mishra,
to work with the shareholders all the way.
Sure. Mr. Mishra, can you tell us what is the reason for the government opposing it?
How do I comment on somebody else's view and shareholders' view or the reasons that they may have? But as far as I am
to your
concerned,
best understanding, your best, yes.
I'll tell you, Mr.
Mr.
Mr. I just wanted to question in. So you said majority of the minority has to approve it, right? Will the government be treated as a minority in this case?
Government is always there in this related party transaction. They are a minority shareholder. And as per law, they have a right to express their opinion.
Okay. So now the government nominee on the board, Mr. Mishra, could you tell us when this transaction was approved? How did the government nominee vote?
So normally all board decisions, as we file as a decision of the board, we don't file as individual decisions or opinions of each board member. So I would leave it at that.
The reason I'm asking that is, I mean, if now this issue has come up in the normal course, this is not a question which would have been put to you. But now that this matter is shaping up like this, would you be able to tell us what because you have a government nominee on the board? What was their view when this matter came up?
We will continue to work, and government has expressed their opinion, which is in public space. My job is to work with all stakeholders, including government and other minority shareholders as well. I will continue to work in that direction.
Have you been told by the government that they are, this morning the news suggests that they will go to the court. Have you received intimation in this regard? I mean, they may take the legal route, yes.
See, all matters of corporate work always have another legal option available to each shareholder. And that is true for every one of us. So I will not get into that. I am saying that as a CEO, it is my job to convince the board on the strategy that I have taken, suggestions that I make, and I will continue on that path. And as Geeta says, continue doing your work, not be bothered about the output. It will happen. What will happen will happen. We'll see.
You know, Mr. Mishra, the problem was also on valuations. You know, going by the numbers that were put out, though you have big plans and you would believe that it's still justifiable at the valuation that you all proposed it. If there's a tweak in the valuations, do you think this deal can still go through?
It's all up for consideration and discussion between shareholders. So
by when,
how do I comment on that?
You know, Mr. Mishra, a couple of factors. If government is treated as a minority party, then this transaction is off, right? Because they have 30% of the company. You all have 65%. Vedanta has 65%. In the current form, it's not going to go through. So I ask you, is there a plan B?
We have got 3 months since the day of the board meeting for convening shareholders meeting and getting it approved. Time is still left, and my job is to work through the process. I will work through.
Okay, so you're saying there is a 3-month period that is still underway. Got that. If this deal does not go through, then what happens as we move along? Does HZL go on and start paying dividends once again? I mean, the dividends were quite solid in the year gone by. So what is the plan if this deal does not go through from the government's end?
I don't do so much of crystal gauging, going forward. If it does not happen, dividend and all that. It's for the board to decide, and you will come to know whenever the decisions are taken.
Have you reached out to what you're suggesting is that you will try and convince everyone to get on board with this deal in the current form. So are talks already on? Are you trying to do that?
Of course. And government and Ministry of Mines is the important stakeholder in our business. They were 29.5% of shares. So I'm always in touch with them for all matters of strategic importance to the company.
Mr. Mishra, our reporter, when we filed the story sometime back, the indication was that before you put this out in the public domain, that this is what you intend to do, the government had already expressed its opposition or concerns with the deal. Is that correct?
See, we are all very optimistic, and we can't really predict what is the end of the road for any initiative.
No, I'm not. I'm just asking you to explain what has already transpired, not crystal gaze. So, did that happen? Did you get a view from them saying that they had concerns about the deal?
No, government is consistent on the view that they have expressed in public and what they expressed to me. There's no inconsistency in their view.
No, I'm not suggesting that there is inconsistency. I'm just asking you, did they express a view that they had they were not particularly keen on the deal?
As I said, that there is no inconsistency in the view, and I take it that, and that is the basis on which I work.
So they are not on board as we understand it as of now. But Mr. Mishra, the other point is you have mentioned repeatedly that the government of India has 29.5% stake in the company. And, they were waiting for some kind of divestment. Have you heard anything on that front? Are we likely to see an OFS soon?
No, absolutely. I worked extensively with Government of India, and I was part of the roadshows. And I'm still in touch, how to get this divestment thing going. And I'm sure it should happen soon.
So is it likely to happen in FY23? Since the roadshows have, you've gone out there and it will be an OFS only.
It will be an OFS. It cannot be anything other than OFS. And I'm very, very hopeful that before March, we should have this in the best interest of everyone.
And Vedanta will participate in that 5% OFS, right?
No. The OFS route is very clear that there are laws how much Vedanta can take as owner. And also there is a creeping acquisition related act in which you cannot buy more than 5% in a financial year. So let the OFS be out. We would know how much percentage is being put out in the market. That would determine who can participate how much.
Okay. All right. We will leave it at that. Thanks a lot for joining in and giving us a lot more clarity on what's happening. That's a CNBC-TV18 exclusive. Hindustan Zinc saying that any transaction has to have an approval of both the majority and the minority shareholders. We will work with all stakeholders, including the government and all other minority shareholders. They are looking to convince the board on the way forward, and 3 months' time is what they're giving themselves. So we'll slip into a quick break on that note. On the other side, there's a big acquisition that Samil or Samvardhan Madison has made. So we'll talk about that with the management in just a bit. Stay tuned.
Co-presented by